You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 17th day of December, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. Now, the best way to join the show live each day at 12 noon Eastern, you only have to do this once. Just go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. You won't have to go through the login process. Just one click, you're in like Flynn. It also gives you access to the question box so that you can ask questions and participate in the discussion. Now, we do open that room up about 20 minutes before the show starts at 12 noon Eastern, and we play some praise and worship videos from the Elevation and Maverick City worship teams. And man, it just dawned on me as I was listening this morning, just right before the show started. We've come a long way from Kumbaya and Rock of Ages. Now, those are still great, great songs, don't get me wrong. But the new contemporary Christian music that's available, man, does it really touch my spirit. Now, along with joining the show that way, there's going to be days you're out of the office away from your desktop and you still want to join the show. It's very simple. Point your browser to youtube.com/CFRN. Not only do we broadcast live each and every day, but we archive every daily show, and currently there are over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. Now, if you happen to be listening to this broadcast after the fact on your favorite podcast player, Apple Podcasts, Spotify, iHeartRadio, wherever you get your podcasts, you'll find us. If you want the full video experience, just hit pause on your podcast player, point your browser over to youtube.com/CFRN, click on today's date, 12/17, and you'll not only hear the show, but you'll see the show in its entirety, complete with charts and all. So with that said, let's open with a word of prayer. Got a scripture for you, Ephesians 4:22 through 24. It says, this is Paul writing to the church at Ephesus, "Put off your old self, which belongs to your former manner of life and is corrupt through deceitful desires, and be renewed in the spirit of your minds, and put on your new self, created after the likeness of God, in true righteousness and holiness." Now, I try to be a tidy person most of the time, except for my desk and my closet. Taking a document off my desk, I fear that, when it comes time to find it or need it, I won't be able to locate it. I know there's such a thing as a filing cabinet, but it's so jammed full of stuff I can't get anything else in there. And the other place I struggle is in my closet with my clothes. You know, some of my polo shirts and my polo jeans, and the shirts are so threadbare, and the pants, uh, the bottoms, the legs, so raggedy. I really need to just, I mean, they're not even worth donating. I should just get rid of them. But there's something that makes me want to hang on to them. Maybe I'm hoping someday that they'll come back in style and I'll be ready to throw on the most recent fashion trend. But truly, some of them are just so old and worn that I have no business ever wearing them again. Yet, I still struggle to get rid of them. Because when I do wear them, man, they fit so comfortably. They feel so natural. It's like that favorite pair of tennis shoes you've had for 10 years. Man, do they stink, but boy, are they comfortable. Now, sometimes lifestyle habits and choices are the same. You may have indulged in a habit for so long that it becomes a part of who you are. It becomes a comfortable outfit for you. Perhaps you're an angry person or struggle with comparing yourself to every person you meet. Or maybe you're impatient with your kids or react to stress poorly. You've always handled yourself this way, so you don't know any other way. You've just accepted that's just who I am. And it tends to become our most natural outfit. These sinful habits actually have the potential to become part of your old life when you become a Christian. The beauty of becoming a believer is that you don't have to be wearing the same outdated, out-of-style outfits you once did. Putting off old habits, especially ones that you are used to wearing, won't be easy. But by the power of the Holy Spirit, it can be done. In the scripture I just read, Paul spoke to the believers in the Ephesian culture. In their day, part of the initiation process for a person involved in their pagan religion was to remove and discard their old clothing, signifying a total break with any previous association. So when Paul implored the Christians to put off their old clothing, he wasn't just talking about the actual clothes they wore each day. He was emphasizing the action of rejecting behaviors that were indicative of their old self, those that did not align with walking with God. To continue and take steps towards obedience and walking with God, we need to daily rid ourselves of those pieces of clothing that are no longer serving us, whether it's habits, lusts, friendships, or associations we're involved in. Paul encourages us to then put on our new self, put on attributes that align with the heart of Christ, and watch the Holy Spirit as He works in removing what was always a comfortable yet old outfit for you. Allow the Holy Spirit's power to help you begin to let out with the old and in with the new. Join me in prayer. Heavenly Father, thank you that you want us to live in freedom. That's just because we have lived a certain way with a certain habit or sin our entire life, that it doesn't define us forever. Thank you that when we become believers and followers of you, that we can put off the old man, the old lustful things of our flesh, and put on the new man, pursuing a lifestyle of holiness and righteousness. Through the Holy Spirit's empowering, we are able to renew our minds day by day and clothe ourselves in purity. thank you, God, for the gift of the Holy Spirit and for the power you have given us. We ask that you renew our minds and prompt us of anything that we are hanging on to in our former life that is hindering us from walking closely with you in our new life. We love you, God, and we thank you for freeing us of all of our old. We gladly invite the new in through you. In Jesus' name we pray. Amen.
Amen.
And amen. Well, happy Friday, guys. End of the week. Let me give you the numbers here real quick from around the world. Start here in the U.S. with the indices, with the cash markets, the indices as they're called. Quite a different picture. Dow's down 495 points. That's over 1.25%. NASDAQ is only down 36. S&P is down 40, which is almost 1%. And the Russell, our man in the street, is actually up 18 points. That's almost 1% for the Russell. In the commodity basket, crude oil, down $1.50, trading 70.88 last. That's a drop of a little over 2%. Gold is up $7.40, trading 18.0570 last. And silver is basically flat on the session, trading 22.49 last. In the Asian markets at the close, the Nikkei posted a loss of 520 points. That's almost 2%. The Shanghai dropped 42 points, and that's over 1%. The Hang Seng fell 282 points, and that's also over 1%. In the European markets at the close, the FTSE posted a gain of 9 points. The DAX fell 104. The CAC dropped 78. And for the CAC, that's a drop of over 1%. So, that gave us a red day in Asia. It was a mixed day in the UK, only because of 9 positive points from the FTSE. And here in the US of A, it is a mixed Radio Friday with 3 of the 4 major indices deeply in the red, but one of the 4, the Russell, up 19 points, almost 1%. So now, if you will all rise, we'll turn things over to Michael. He'll give us a recap of everything that happened in the live training room this morning. After that, I'll come back. We'll cover the logic alerts for the week, the concierge trade alerts for the week, and at any time during the broadcast, if you have a question, just type it into the chat box, and we will be very happy to answer it for you. Michael, I can see your charts, and so let me pass the torch here. It's all yours.
Okay. Thank you. Thank you. I'll be seated. Let's just have a look here. What I was looking for is this. Here we go. So this is playing out really well. I think the Russell's leading the pack here. From what you just said, Dwayne, the Russell's up 19, and I think it's going to lead the pack. Everything's going to be green. Knocking on wood, but by the end of the day. So I'll give my theory on that when I get to the charts. Good afternoon, everyone. Happy Friday to y'all. Today is Friday, the 17th day of December, 2021. If you have not taken a free trial with us and you want to take a free trial, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest training challenge so we can tell a one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so make sure you click on that link. All right. Now, recaps. We had a pretty good day today. It wasn't great, but it was pretty good. If you're going to read the spreadsheet, you're going to read all the COTC risk disclosures down at the bottom. Today is the 17th day of December, 2021. We lost 4 ticks in crude. We're break even on crude. We lost 4 ticks in gold. but we're up 56 on the ES. Today it took 5 minutes and one trade to get to the goal for the day. At that point, I was up $112 a contract, and we took a total of 19 trades this morning. So on the month now, we're up $10,170 a contract. That's over 13 trading days, averaging $782 per contract per 2-hour trading day. On the year, we've gotten our goal for the day on 239 out of 242 possible days. And that puts us at $142,245 per contract. So we're 242 trading days, averaging $587 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day and you added one contract per month, you'd be trading 12 contracts right now. And so far this year, you would have worked a total of 62.7 hours, and you would have averaged $3,058 per hour. Now that is if you did everything exactly like I did. Once you get into multiple contracts, doing everything exactly like I do is not going to happen. But you could have done better. You could have done worse. But the idea is that you would not have to work all day, every day. You'd be able to get in there, make your money, and get out, and still make a decent income. All right, so let's get into the actual trades. Now, we'll start out with gold, okay, because we didn't do much with gold today. You can see we didn't do much at all with gold. Started out here, we missed a couple of trades, one there and one there. And then we had a stop out right here. Now this trade here, I stopped out. I mean, you see it went into profit really well. And I totally forgot I had that trade on. And by the time I realized I had it on, it stopped me out. I brought it over and showed the stop out, but I didn't bring it over and show the profit because I didn't remember I had it on for that part. So I was minus 8 ticks there. Then I got 4 of it back right here. So I was minus 4, and that was all that I did with gold today. There was a trade here that would have been a nice trade to get into, a trade here that would have been nice, a trade here that would have been nice, and that was all that I did with gold. Get all the way over here, and nothing. It really didn't give much during the break. It had one trade right here during the break, right there. It's starting to set up another one, but it's going to have to pull back a little bit deeper because we have unbroken dynamic support right here. Okay, so the ES is our real story today. I'm going to do that one last. Crude oil, we ended up with break even on the crude. So we'll go back here to the beginning. Yeah. Okay. So it doesn't look like I wrote anything down here. Oh, this is, okay, on crude, yeah, right. So on crude, we had a break even. I missed a trade, we had a break even, I missed a trade. Now right here, either one of those would make great trades to have. But I was really busy with the ES this morning. There was a trade right in here. It looks like that I could have taken, but I didn't. And I finally took this one, picked up 8 ticks on it. Okay, and then I took this one and stopped out to the tick. So that put me back at break even. I was plus 8 there, back to break even right there. And then we get into this mess all through here. There really wasn't anything you could do here. It wasn't trending. There was really nothing to do. You get into the break, and there was a bounce off the BBC right there. Would have been a break-even trade for me if I'd have taken it. Still during the break, there was another trade right here you could have taken for a little bit of profit. Then it got really sideways and messy. Then there was one more trade right here you could have taken. And that was it. Now, the ES was our big story today. Okay, and the ES continues to be our big story. I'm thinking I'm going to go to the larger time frame to begin with. What we were saying this morning during the room was all about the way that the ES was acting. Okay, now we started out here and it started out just tanking. And I was looking left over here and looking left over here all morning. Okay, so right here is where it should have hesitated on the way down, and it did. It should have gotten a little more support there is what I was thinking. Then it broke through that. And when it broke through that, this is where I was expecting it to go down to. And it did. And if it breaks through that, this is where I was thinking it was going to go down to. And if it gets into that, then all the way down here. But I think that the whole narrative of the market has changed. This was looking really bearish the whole time, and it did everything that it should have done on the bear side. But as we were getting into the end of the morning session, we were looking for a close above the BBC here. And then we were looking for a close above this candle, above the wick of that candle, and above the BBC before the break. And then once that happened, I was looking for a pullback. I drew this line in here. I was looking for a pullback here, and I said, what I think is going to happen is we're going to get a wick down here. It's probably not going to happen all in one candle, but we're going to get a wick down here, and then we want to have a close back up above the BBC. Now, if we get that close back up above the BBC, I don't know how many candles it's going to take, but if we get that close back up above the BBC before it gets back down below here, and I think this is going to happen, then that's going to be bullish going into next week. Okay, I think we're going to get some consolidation all through here, get some more consolidation, and then it'll be really bullish going into next week because we have a woo spot that goes from right here all the way up to right here. And so next week, or I don't know when it's going to happen. Okay, it could happen today. It could happen Sunday. But the place that I see it going to is right about here. Now let me just do the math. Hold on. Let me get some numbers and I'll do the math for you with you. We'll just say 4601 to 4711. Hang on. 656. Oh wait, I'm starting at the wrong place. Hang on. Hang on, I gotta do it again. Well, anyway, right about here is where I expect it's going to get up to, and then it'll pull back, and then it should go the rest of the way. That's over the coming few days, including the weekend, Sunday night into Monday. And next Friday, we're not going to have anything. So a week from today, we're not going to have the room, morning or afternoon session. And the 21st is the day that I have to bring Jake to the airport. So that is the day that I'm not going to be there either. All right. So I just wanted to say all that. That's what we were looking at this morning. And then we had a whole bunch of opportunity to trade. So let's get right into that part. All right. This was our first trade of the day right here. I picked up 9 ticks on that. Then I picked up 8 more on this one. Then while I was writing all that down, I missed all of these right here. And I was looking for it to get down to here and turn around a little bit. And it kind of did. It consolidated a little bit, turned around a little bit. Then it started going down some more. So at this point right here, we were at plus 17. Okay, and then we had another 8 ticks over here. We went to 25. Then 4 ticks, we went to 29. Then, well, that was a break even. Then 4 ticks right there, we went to 29. Then 2 there, we went to 31. Then we went from 31 to 39, so we had another 8 there. And then we had a break even. Then we went from 39 to 44, so we had 5. And then we stopped out somewhere in here, right there. We stopped out, we went back down to 36. I went from 39 to 44 down to 36. And then we went from 36 to 48 somewhere. Now I missed a few trades in here during all this. I was looking at something, or I was distracted by something, or I might have gone for a walk. It was right about that time. But there were some trades triggered in here that I didn't end up getting into. One there, one there. In here, I picked up 12 ticks here. I went from 36 to 48. And then I had a break-even trade right here. And there were some more trades in here that I ended up not getting into for some reason. There was one long right here that went a little bit, a long right there that went a little bit. Then the cycle had to reset. Then it started giving shorts, but we're inside the zone, so we didn't have anything through there. Then I had a break even there and another plus 8 right here. It looks like there was another trade right there. And we had a plus 8 right there. That got me to 56 on the morning session. And that was where I ended trading on the morning session. And what we wanted to see at the close of that candle, the close of that half-hour candle, was a close that was above this wick and above the BBC. And that's what we ended up with above all of that. And so then I was expecting a big drawdown all the way down to 46.20 is what I had said. And we went through that a little bit, which is kind of what I expected. And now hopefully it's going to keep running up from right here for a little bit longer. It should run up to here, then go sideways a little bit, then run up to here, and then pull back, and then make a big run. This is over the next couple of days, I'm thinking, the next couple of business days. I didn't look at any of the questions if anybody's typing anything in. I guess, yes. That's, okay. And yeah, I'm trying to stretch this out so I can see it, but I can see just the little bits of the questions. There we go. Now I can see. All right, but all that was before I even started talking. All right, so let me go back to the spreadsheet really quick. Here we go. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down to the bottom. Today is the 17th day of December 2021. We were break even on crude. We lost 4 on gold, and we're plus 56 on the ES, plus 660 on the morning session. Today it took 5 minutes and 1 trade to get to the goal for the day. At that point, we're up 112.50. We took a total of 19 trades this morning. So on the month now, we're up $10,170. That's over 13 trading days, averaging $782 per contract per 2-hour trading day. On the year, we got our goal now 239 on 242 days, and that is averaging we're averaging $587 per contract per day on the year. That's but that puts us at $142,245 per contract per 2-hour trading day so far in the year. And if you were to quit trading, following the 24/20 blueprint, quit trading when you got your goal for the day and add a contract a month, which is a little adjustment to the trading plan, but you would have worked a total of 62.7 hours and you would have averaged $3,058 per hour on the year. Okay. And that's it, guys. If you've not taken a free trial and you want to, go to eminitrainingschool.com. All we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on that confirmation link. Okay. If you don't click the link, we don't know you took the free trial. So click on that link. All right. And that's it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am ready.
Excellent. And look where that candle just closed, that 30-minute candle. Blue above the MA1. That's a good looking candle right there.
Recap of the recap.
Today, 5 minutes, 1 trade, 112.50.
Good job.
Thank you.
Now, before you go, I just want to share this. Yesterday, I think it was, I shared the Zelle link for those who want to participate in the Christmas party for the 700 kids we have at the orphanage in Kampala, Uganda, East Africa. And I believe somebody watching this show who's not actually a member or a partner sent an incredibly generous gift. And brother, we respect your privacy more than the government does, so I'm not going to speak your name. I just want you to know you put a lot of smiles on a lot of faces when they have that party. So God bless you for it. And anybody else that wants to participate, you could use Zelle. Most banking apps have Zelle. Just send whatever you can, if God moves you to even do so, to Jesus Loves New Hope Kids at gmail.com. And it works like a charm, that Zelle link. So, Michael just told you what happened in the live. I'm sorry, you were going to say something?
Nope, that's it. That's it.
Michael
just happy to hear that.
Went over. Yeah, no, it's so awesome. That bell's for all of you. Okay, Michael just went over what happened in the last 2 hours in the live training room from 9:30 a.m. to 11:30 a.m. Eastern. This is what's happened the entire week with our Logic 247 alerts. The alert channel opens for our members Sunday night at 6 p.m. Eastern and remains open around the clock throughout the week until Friday afternoon at 5 p.m. Eastern when the global markets close. Now, we're in week 176, and as of 12 p.m. Eastern today, this week we've issued 80 alerts total. 7 never triggered. We're still awaiting the outcome of 3. So that gave us 70 actionable alerts, of which 6 or 9% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Now, along with the logic alerts, which come out via the Telegram alert channel, around the clock whenever opportunity presents, could be 2 a.m. or 2 p.m. We have traders around the world. Our day session is their night session, and vice versa. But we also still have our original alert service, the concierge trade alerts. You may want to grab a screenshot of this because we're going to go through each one of these markets and we're going to take a look at each individual concierge trade alert. The way you handle this is when it's posted each evening. I posted it last night a little later than normal, right ahead of the workshop. So the market opens at 6 p.m. The Friday session began last night at 6 p.m. Eastern. So I didn't get this out till 9 p.m. Eastern. But here's how you do it. Whatever market you trade, you put a line in the sand on your chart here and a line in the sand here. Take note of the current price at the time this is posted each evening. Because from that point forward, if price begins to climb towards 46.95, that's bullish, and our strategy will look for opportunities to be long the market. If price starts trending down towards 46.37, that's bearish, so our strategy will start looking for opportunities to be short the market. And you'll use Logic 247 and everything you learn in the live training room to yourself find opportunities to be long or short the market based upon what the chart and the indicators tell you. Okay, so with that said and done, let's go to a daily chart of the S&P 500 E-mini futures. Now, last night in the workshop, I changed the last leg up because we put in a new all-time historic intraday high on yesterday, December 16th. And so from this swing low, the bottom put in on December 3rd, up to the high put in on December 16th. We've already retraced to the 50% fib retracement. In fact, we've retraced all the way, not all the way, but almost to the 62% fib retracement. Now remember, this was a big red candle all the way down, and then buyers came in just ahead of that 62% fib, and look how far they've driven the market back up. Now, as we put in the new all-time historic high, it created a bullish cross on the daily chart, which is very important. Now, this pullback should have been good support. Well, it was. It was good support when it hit the BBC and it bounced it all the way up to here. In other words, basically 46.46, and it bounced us up to 46.73. Okay, it's a nice, like about 30-point bounce, I guess. However, interesting events have unfolded. It's rare that a pullback to the daily BBC doesn't hold. In fact, in all markets and all time frames, the pullback holds more often than it doesn't. The larger the time frame, the more reliable that the pullback's going to hold. See, here the pullback held and the pullback held, and then this one didn't, but then when we pulled back up, it did. Okay, now pullback held here, and really, even though we're below the daily BBC, price is still touching the candle. And so we could easily end up closing the day back above the BBC. That's certainly within the realm of possibility. Because off the lows this morning, the bulls came in hard and then they ran out of steam. So the important numbers that you want. Now, look where the market found resistance. All right, this is the 24% Fibonacci price retracement, not an extension. Okay, this is a retracement, 24% Fib retracement from this low to this high. Coming down, it should be good support. We know that. But as price pushes back up, it has the potential to become good resistance. And it's right there where my horizontal line is on the cursor. Okay. The resistance that stopped the market in its tracks today was blue and climbing and the step line. Now this red and blue indicator, it's called the CFMA1. I refer to it as red and falling, blue and climbing. I think for obvious reasons. One is resistance, one is bearish, the other is support, it's bullish. So we've got a bullish cross on our hands on the daily chart with a red candle currently trading below the daily BBC after a bounce off. Now, fibs are nary, so we'll simply call that a bounce off the 62% fib. So we know where resistance is. We know where support is. It's pretty simple today. Could there be a reaction as we drop to this 50% fib at 46.15? Absolutely. You have to remember, institutional traders, hedge fund managers, they watch daily, weekly, monthly charts the way we tend to watch tick charts and range charts and 30-minute charts. So when price pulls back to a fib on a daily chart, like this 62% retracement, see, buyers came in early. It's almost like a self-fulfilling prophecy. As price approaches that fib, those institutional traders, they buy their tickets early because they don't want to get left behind. But they got some work to do. They got to get back above the 38% fib retracement. They got to get above blue and climbing. They got to get above the step line. So they got their work cut out for them. The path of least resistance at this point appears to be to the downside from a daily perspective. Now, I know that most of you don't place your trades based on a daily chart, but the reason I encourage you to always look at the daily chart before you start your trading session is so that you can be seeing what the big boys, the deep pockets are seeing. Because once you understand how price flows, then you have the ability to know what the next high probability move will be. Doesn't mean you can predict the future. Okay? That's not how this universe works. God didn't give us the ability to change the past or to know the future. And those two things are inextricably linked for eternity. So even though we can't know with certainty what's going to happen next, based on our strategy, our indicators, and the underlying principles upon which markets operate, we can know what is going to be the next high probability move most of the time. Well, define most of the time. Okay, I will. Over the last 176 weeks and over the last 9,208 individual trade alerts, the price has not done the next high probability thing 20% of the time. Over 176 weeks, 9,208 trades, on average, 20% of the alerts do get stopped out based on that $300 risk profile that I mentioned to you just a few moments ago. And to put that back into context, I'll show it to you one more time. 80 total alerts, 7 never triggered, waiting on 3. 6 stopped out based on that risk profile. So this week has been a very kind week so far. 9% stomped down. Last week, I think the number was 12. But the average over the last 176 weeks is 20%. So even when we learn how to read the chart, like a newspaper or a mystery novel, once we understand how price flows across all markets and all time frames, we can trade with certainty, knowing that 20% of the time the market is not going to do what we thought it was going to do. It's going to do something different. And the market's the boss. The market is always right. That's why our methodology and strategy is based on the underlying principles of how all auction-style markets work. And that's what these are. Whether you're trading crude or gold or stocks, crypto, forex, you've got somebody on the bid, somebody on the ask, and price channeling back and forth all day long. In the case of crypto and forex, literally just around the clock, and futures around the clock. Stock traders are lazy, man. They only work 9:30 to 4. No, I'm just teasing. But as we roll out on TradingView here, heading into the new year, we will be giving you access, if you're a passport holder, to our indicators and strategy, which you'll be able to use not only on futures, but on stocks, on forex, on crypto, options. You've heard me say for years that our methodology and our strategy and our indicators are fluid across all markets and all time frames. And now you're going to get a chance to actually see that all the years I told you that, I was telling you the truth, because you'll be able to see it happen live in real time on TradingView. Now, to get your DT Pro data feed hooked up to the TradingView platform, call Bert at 866-928-3310. 866-928-3310. Bert is our broker at Daniels Trading, and he's been our broker and our friend, I think, since 2008. But you can call him. He told me the other day, he mentioned to the audience he was planning to make a video that shows you how to hook your Daniels Trading DT Pro data feed up to the TradingView platform so that you don't have to pay some of those really high fees for futures data. Because the S&P trades on the CME. The Dow trades on the CBOT. I think crude oil trades on the NYMEX. I mean, to get and you get all that data for free. All that futures data you get free with a Daniels Trading account. But if you go out on TradingView and buy that data individually, okay, so that you can have access to all these different markets, it's going to run you about $350. So, no need to say any more about that. Okay, we know where we are on the daily. We know we have a new all-time historic high. Let us go to the 30-minute chart of the S&P, where obviously last night we never triggered on the long side. But boy, did we have some fun in the workshop. In the workshop last night, we drew in this little window of opportunity here from 46.50 down to the zone at 42/43. But as soon as price closed below blue and climbing, I took the guys on a little stroll with a smaller time frame chart that I use for execution. And let me just walk you through a couple of those videos and show you how it turned out. If I can scroll up that far. Here we go. Okay. All right. That should be enough, right? Yeah. Okay. So, I didn't want it to be that big. Now remember, when this was happening right here, price had just broken below blue and climbing, right? And as price broke below blue and climbing, you can see we were taking action here. I drew in this window of opportunity, and then we knew we had a potential for some support in this area, and then there was this window of opportunity. This is what it looked like on the 30-minute chart as that window of opportunity started to trigger. And I was guiding the guys in the... Now, I forwarded this over to the Alert Trial discussion group just to give you an idea of some of the things that happen in our workshops, in the members-only workshop on Thursday night. I then posted this after the workshop and said, if you're waiting on this trade, remember, we'd already traded this and this, enter on a break of this low or pull back to this line if price gets rejected there. And it just said, here's an idea of how to trade the bigger picture 30-minute woo, which was right here. So the market was very kind on the way down to that spot. Price then pulled up to the black line, step line. It's just slightly modified. Here's price getting rejected. I threw this out as a freebie, 46.52 to 46.50 is a potential trade. Done. There it is, 52 to 46.50. And the 30-minute woo that got us interested in this whole thing is now filled as well. Okay, and you're looking at this on my trigger chart, and this is the 30-minute view. Okay, so for those of you that did not make it to the workshop last night, we talked about some good stuff. I think it'll really help you. So if you get a chance over the weekend, do take a look at it. Okay, the CTA number on the short side last night for the ES. Now remember, the CTAs and the Logic 247s are two different things. The CTAs are posted as a static report. The numbers are good for the entire session. The logic alerts, those come out around the clock, 24/7, as opposed to the static report, which is published once per session. So now I'm just trying to get back to my CTAs to make sure I didn't accidentally move that ES number. 4637, that's the number. So here, let me just, oh wait, get on the right chart. Man, I get so many spam calls. I'm just gonna turn my phone off. I'm sorry. How rude of me. Right. Okay. So the numbers again. I did accidentally move this, and I need to unmove it. It's 4637. So let's make things right. Aha. All right. Now the vertical line separates today, Friday, which began last night at 6 p.m. Eastern, although I didn't publish till 9 p.m. Eastern. The vertical line separates today from yesterday back to Wednesday. Okay, so we opened below the BBC. And we attempted to rally to the BBC, but the market was heavy. And that's what took us on this journey all the way down to the weekly trading zone where we found good support. That's what we expect when price drops to a weekly zone, just like it did here and here. We expect good support, and the market gave us exactly that. Okay, and then from the support, whenever the market finds support, it's going to go look for resistance, which it found at red and falling for about an hour, and then probably the bulls were out. They pushed through, got us to the BBC. Now, the pullback to the BBC, it holds more often than it doesn't. And here's a beautiful example of how it holds, because it held, and it sent us right back down through blue and climbing, back to support at the weekly trading zone. Now, we dribbled over the trigger line here by a smidgen. How small was it? Where's my pop-up? There it comes. The low was 34.50 of this candle. Okay, so that's 2.5 points. Okay, that's not bad. I can live with that. Then price got back above the trigger, triggered again. This time we dropped from 46.37 to 45.24. We'll call it 25 to be conservative and make the math easier. That's 12 points at $50 a point. That's a $600 per contract 30-minute candle. Price continued on down to the area we highlighted last night where it would potentially find resistance. I mean support. And it did. We were looking for potential support here and here. It did spike it a little bit, but it didn't make it all the way down to the final trade 2 target. On every alert, the final trade 2 target on a short is the zone below. On a long, it's the zone above. Price is always trying to get to a weekly zone. If price on the 30-minute is above the BBC, it's trying to get to the zone overhead. If price is below the 30-minute BBC, it's trying to get to the zone below. Support, support, support. Okay, and then coming back up, there was a question asked last night. What do you mean when you talk about a head fake? This is exactly the answer to your question. This morning in a live training room, price closed above the BBC, and then price started to move above the weekly trading zone, and then this candle took out this high. We weren't expecting resistance until this point up here. And a head fake means the market makes you think it's going to do one thing and then does the opposite. That was a great question, and it's incredible that I have such a great opportunity to show you. Now, I said this morning I'm suspicious this is a head fake, but even I got convinced that maybe it wasn't, and I got slapped around like what was his name, Shemp on the Three Stooges. Yeah, so I got to keep the show short so I can get back to trading. But anyway, price has come down through the short CTA again. Now, not all triggers are created equal. Notice how on this trigger and this trigger we had red and falling. On this trigger, okay, we were below the BBC, but down here we had blue and climbing. So typically those are best avoided according to our guidelines, okay? However, the distance was so great from the trigger to blue and climbing, some of you I know shorted it anyway, but you knew that you were going to run into potential resistance, a support in this area. And so you were quick to take your profits because look what's happening. blue and climbing, is now going to try and walk us right back up to the BBC. If it can accomplish that and get us above the trigger, then we may have, let's see, 1, 2, 3, we may have our fourth trigger. Once an alert triggers, logic or CTA, once it triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. And this is a real good example of that. Okay, to the Dow. Okay, you grab this, drag it over without moving it. Good job. All right. The short CTA last night, the long never triggered. It got rejected. Right at the important price, important area, price got rejected. So no trigger. But we did trigger on the short side. Notice we opened at a weekly zone, ran up to the BBC, found resistance. Remember, the pullback holds more often than it doesn't. So down we came through 35,745, and we put in a swing low at 704. So basically that's 40 points, $5 a point, $200 per contract traded. And we got back above the trigger and dropped again. This drop took us to, we'll call it 35,720. So that's 25 points at $5 a point. And then price opened, this candle closed here, opened here, and it dropped for a minute, but it never really gave you the opportunity for a trigger. If you took it, that's fine. The swing low of that candle was 32, so we'll call it 35, 10 points, $50 a point. Okay, then we get back above the trigger, trigger again. This time, the swing low is 35,728. We'll call it 35,730. Okay, so that's 15 points, $5 a point. Then we get back above the trigger. Now this time we get below the BBC. We get below blue and climbing. So being this far below blue and climbing should not prevent you from taking this short trigger, which took us down to 35,713. So we'll call it 15. So the math's easy. It's 30 points, $5 a point, $150 per contract traded. Then we get back above the trigger, trigger again, back above the trigger, trigger again, back above the trigger, trigger again. This time we make it all the way down to the final trade to target, which on a short is always the weekly trading zone below. Yes, we kept going, and we sliced through this zone like it wasn't even there. Only 3 things happen at a weekly trading zone. The most common thing, 70-75% of the time, is consolidation. Second most likely, 20-25% of the time, rejection. And typically 5-10% of the time, but we've seen a lot of them lately, a slice. This is where price slices through a zone like it's not even there. When that happens, once that slice, once that move runs out of steam, what typically happens is price retraces back to the zone it sliced through, and then it continues in the direction of the slice. So that's a perfect textbook example of how a slice looks, how it works, and how it typically unfolds. Okay. So from 745 down to the target at 85, because the zone is 35,680/85. So that's 60 points at $5 a point, $300 per contract traded. Now, just because you reach the target doesn't mean you have to. And even look, we had a slice here, and then price pulled back up before it continued in the direction of the slice. We had two slices back to back right there. Again, the most typical thing is this consolidation. Okay. And when I see a good example of rejection, I'll point it out. I don't see one on this chart. Okay, but we'll probably see one as we walk through the rest of the chart. So on this one alert, now there were logic alerts to go along, to guide you, okay, that the CTA on the Dow produced 1, 2, 3, 4, 5, 6, 7, 8 triggers. One alert, 8 triggers. Is that a little unusual? Nah. 3 to 4 is not unusual. 5 is, wow. 8 triggers off of one alert. That's probably at the higher end of the spectrum. Have we ever seen more than that? Yeah. We've seen days with 10 and even more triggers off the same number. Why? Why does that happen? Because important prices and important areas are almost always tested. Weekly trading zones are important prices, important areas. The CTA numbers are important prices, important areas. The logic alerts are important prices, important areas. And the longer you're with us, and the more sessions you book, the more classes you show up for, the sooner you yourself will become to understand exactly how it all comes together. So from 35,745, we ultimately dropped all the way, almost to the zone at 125. That's too much math. I don't even want to, because this was the published entry and the published target. So anything else that happened below the published target, I don't want to take responsibility for, but congrats to everyone who understands our methodology and strategy and just simply knew to be short by looking at the chart. The same way we knew to be short looking at that S&P chart last night during the workshop. So here's the Russell. Looks like we got two-sided action on the Russell. Okay. 2182 was the long trigger, and it ran right up to the target at 2190/91. So that's 8 points at $50 a point. That's $400 per contract traded. Price then got back below the trigger, triggered again. This time it put in a high at 2185. So that's 3 points, $50 a point, $150 per contract traded. On the short side, short CTA was 2134, the first trigger. Took us down to 2129. Let's just call it 2130. 4 points, $50 a point, $200 per contract traded. And then we get back above the trigger. Let's see, this closed here. It's closed here. Rally came back down. So yeah, we had another trigger. And the low was 2130. So 4 points, $50 a point, $200 per contract traded. We got back above the trigger. Triggered again. This time we dropped to 2119. I'm old, I'm just going to use my calculator. 2134 minus 2119 times, that's 15 points times $50 a point, $750 per contract traded. That's what the market made available. Then I got it back above the trigger, triggered again. This time it dropped to 28. So that's 6 points at $50 a point, $300 per contract traded. So on the short side, we had 1, 2, 3, 4 great triggers. And we already talked about the 2 triggers on the long side. Okay. One more index, the NQ. No trigger on the long side, but we did trigger on the short side. Now the NQ pays $20 a point. The trigger was 15,780, and we dropped to 65 and a quarter, so we'll call that 66. So that's 14 points, $20 a point, $280 per contract traded. Then we got back above the trigger and we dropped to from 780 to 770. That's 10 points, $20 a point, $200 per contract traded. Back above the trigger. This time we triggered, well, actually, we triggered here and we dropped to 775. So that's 5 points, $20 a point, $100 per contract traded. Then we got back above the trigger and we dropped again, and this time we made it all the way to the target, which is the weekly zone below. All short alerts, the final trade to target is the zone below. Then we get back above the trigger over here and we drop. And now here's another one of those situations. Okay, the trigger is above the BBC. We don't go short above the BBC. You would have to wait until price got below the BBC. But you see blue and climbing down there. But there's a weekly zone ahead of that blue and climbing. So you might have felt comfortable taking this trigger. And then we triggered again here, but right in the face of blue and climbing. That's a no-no. Triggering here. You've already gotten below blue and climbing when you trigger. Okay, way down here. So there's really nothing wrong with that trade, which dropped to 742. Call it 38 points, $20 a point, almost $800 per contract traded. So we got 1, we got 2, we had 3, we have 4, we had a 5, a 6, a 7, and looks like we could have number 8 on tap right here. Okay. All right, so that covers all the major indices: S&P, Dow, Russell, and Q. We have rolled forward on crude to the G contract. Okay. Now, we have a window of opportunity right here. Our CTA trigger last night on the short side was 71.35. And on the first trigger here, we drop right to the zone at 70.95/71. So that's a $350 per contract trade. And then price did not get back above the trigger again. This was an oddity. This is unusual, there only being one trigger. You saw that all the other markets had multiple triggers. That part's not unusual. Now this is going to give you goosebumps, okay? Not because it's magic, but because it shows you how well these things work. when you understand how price flows. We rolled midweek to the G contract. These weekly trading zones were based on the previous contract, the F contract. And in the early days, people would always say, oh, okay, we rolled, so we got to make new zones, right? Well, back in 2009, I didn't have the answer to that question. So we watched it for a while, and by 2010, we knew that no, this important prices, important areas are the same. It doesn't matter what contract you're on, what market you're on. And so even though these zones were created for the F contract, we rolled to G midweek. Look what price did. It came right down to the tick to the weekly zone and bounced right back up to the weekly zone overhead where it held as resistance. And if it can get below this little bit of blue and climbing here, then there's a very nice potential trigger from about 70, 55. It's about a $500, $550 per contract window of opportunity right there. Okay, but don't jump in yet because price is trapped between the BBC and the zone as resistance and blue and climbing as support. We need to see price take out these swing lows before we enter this move. Okay. All right. Well, that was easy. Only one trigger. Okay. But it did take us from the published entry to the published target. Okay, gold. No trigger on the short side. Triggers on the long side. Now, 1804 was the trigger. And this little guy here only got up to 1805.3. So it's $100, $130 per contract traded. We got back below the trigger. And on this move, it took us to 1811. That's $700 per contract traded. But then it kept going, and it actually put in a swing high at 1815. That's $1,100 per contract traded if you stayed in it all the way up. Okay. Most of us on this dip right here would be taking our profit. Okay. Okay. So then we got back below the trigger, triggered again, but we don't want to buy when we're below the BBC, and we don't want to buy just right into the face of red and falling, which is potential resistance. Okay. Consolidation. I never found you a rejection. Well, rejection looks like this. This isn't textbook rejection because you got 3 of them back to back. Well, I guess there's nothing illegal about having 3 back to back. See how price came down, touched the zone, and when the 30-minute candle closed, the only thing left touching the zone was wick, was wick, was wick. That's 3 rejections back to back, which means, yes, the zone held as good support. Oh, and then when it rallied up, we got rejection here. And then we went into consolidation here. And then we moved higher. Oh, and here's a slice where price did not do what it typically does. Remember, when price slices through a zone like this, it will typically retrace back to the zone it sliced through and continue in the direction of the slice. This slice just kept going until it hit the zone at 1800. Traders have asked for years, can I just trade zone to zone? Can I just make it that simple? No, the answer is yeah. But you'll have some, number one, you have to have a larger account. Number one, you have to be able to handle volatility. Okay, it's going to require more risk than what you would assign to a typical trade if you're trading it as sort of a set it and forget it kind of thing. book a mentoring session with me and let me caution you, let me tell you some cautionary tales before you embark on that venture. But as you can see, obviously, price goes from zone to zone to zone to zone over and over again and again. That's how the zones have behaved since we first published them, December 14th, 2009. Michael and I traded them before we published them. Okay, last market, silver, 2260. Now, a $1 move in silver, if you're trading futures, is worth $5 grand. A $1 move, say from $21 to $22, that consists of 100 pennies, okay? So from 2260 on the first trigger, we ran up to 2267. 2 pennies is 100 bucks. So 7 pennies would be 350 bucks. I believe math's correct. Then we get back below the trigger, we trigger again, okay? And the real swing high was 69. So that's 9 pennies. And then we get back below the trigger, but this trigger is no good for us because we would be trading right into the face of resistance. And you see what happened when price ran into red and falling? I mean, the pullback to the BBC held, but price got rejected at red and falling. And then again, next thing you know, we got a bearish cross on our hands. This is why we don't want to buy in the face of obvious potential resistance. Okay? And so now that we're below the BBC, the next high probability move for silver is to the downside. Unfortunately, you've got an obstacle here, potential support, potential support, potential support. So this could be a bumpy ride to the downside. If you're looking for something to trade, I would look at something probably other than silver. And by the way, silver can be very volatile and margins are extremely high. So there are, especially if you're new, there are other markets that you can trade other than silver and still do just fine. So that brings us around the world back to our daily chart, okay, where we sit just above the 50% fib retracement of the last leg up. Price is still below the daily BBC. So we're below the BBC, we're printing a red candle. Bulls and bears are really duking it out here, but for the moment, the bears have the upper hand. The candle's red, and price is below the daily BBC. So we'll see how they finish the session. Okay. If you've not yet become a member of CFRN, a passport holder, why don't you give yourself an early Christmas gift? Okay. And if your goal, now I'm not an accountant and I can't advise you, I'm the worst person in the world to give you any kind of accounting or tax advice, but talk to your accountant. If you have a goal of eventually learning how to trade for a living, right, then the money you spend on a passport may or may not, according to your CPA, be tax deductible as a business expense. It's just like you were paying to go to some college class somewhere to learn how to be a dental tech or whatever it might be. You follow me? So I'm not giving you tax advice. I'm telling you to check with your CPA. But this could be one of the most important decisions you ever make, because all traders end up in one of two groups. This group or this group. You're either going to be the 9 out of 10 or you're going to be the 1 out of 10. Now, what separates the two? The most common thing is a teacher. 9 out of 10 traders don't have a living, breathing teacher who puts on and takes off trades live in real time in front of them every single day, explaining every move he makes, every trade he takes, and the rule behind it. all while answering your questions at the same time and spinning a dish or plate on a little pole. You didn't know that part, did you? Sometimes he does it standing on a basketball with one foot, but I'll show you pictures later. If you want to become a member of the family, go to eminifuturestrading.com. With a couple of clicks, you can put a CFRN passport for yourself under your Christmas tree this year. Now, you're probably thinking, I probably better talk to the wife. Here's the Christmas deal. One passport covers you and your wife. Did he just say that? He did. If you join between now and Christmas, okay, the passport's going to cover you and your spouse. That's a pretty good deal. You'll have a living, breathing teacher every day for 2 hours, every trading day, 9:30 a.m. to 11:30 a.m. Eastern, answering every question you have because you're trading along in your simulator, learning the methodology and the strategy. You must trade in your simulator until you qualify to go live. How do you qualify to go live? You need to put together 10 consecutive days in a row in sim where you reach your goal in 10 trades or less. Once you do that, our 2420 blueprint will give you the green light to go live with one contract. Once you go live, now your goal is to increase your account balance by $2,000. Once you've done that, the blueprint will give you the green light to add a second contract. Now, that's a day to be dancing in the street because you've just accomplished something that 90% of traders will never do, okay? The second contract doubles your output for the same number of points, and it's paid for with profit you earned in the market. The blueprint will always notify you when it's time to add another contract. Number 3, number 4, number 5, number 10. But you only add one at a time, and you only add with profit you earned in the market. If you follow that, it makes it very difficult to blow up your account. Because once you go live, if you have 2 bad days back to back, you must come out of the live account, back to the sim account. It's not a walk of shame. It's a smart man's business decision because you need some help. There's no shame in going from sim to live back to sim. No, because you want to get this thing right, because you want this to become how you provide a living for yourself and your family, okay? So the more you treat it like a business, the more it will behave like a business, a wise man once said. So, if you follow the rules, I can't promise you'll never blow up another account, but you will have to break some rules. Because when you have those 2 bad days, not only do you go back to sim, but you book a one-on-one mentoring session with myself, Michael, Valerie, Bert, any of us, all of us, because we need to find out what created those 2 bad days back to back. We'll walk through the trades with you. That's why you keep a trade journal. So when we have that kind of a meeting, you can say, okay, on this day at this time, I took this trade for this reason. And we can help you troubleshoot. Once we've got you back on track, then you'll go live again right where you left off. Let's say you'd earned your way up to 3 contracts. You don't have to go back to 1 contract. You can pick up right where you left off. Once you've traded a day or 2 in the simulator and regained your confidence. So along with having a live teacher, 9 out of 10 traders don't have a business plan or a trading plan. Those are 2 very different things. 9 out of 10 don't have the 3 most important things a trader needs: a teacher, a business plan, a trading plan. 9 out of 10 traders don't have it. Okay? But as a CFRN passport holder, you will. You'll also have access to unlimited one-on-one mentoring. You will learn our proprietary methodology, which you can apply to not only futures, but stocks, Forex, crypto, options. You'll own the indicator set for life. You'll receive the Logic 247 alerts around the clock. You'll receive the CTA report every evening. And you'll have access to the members-only workshops on Thursday nights. And once you become a member, you'll have access to the workshop channel, which means you can go back and watch previous workshops. Okay? We have so much, our library is so huge with videos and training about just any and everything you can imagine. I don't want you to get too bogged down in trying to watch too much old stuff, because we're teaching you every day live in real time moving forward. But on holidays and weekends, it's good to go back, maybe go to youtube.com/CFRN, scroll back 6 weeks, 6 months, 2 years, and fast forward to the part where Michael's doing the recap, then fast forward to the part where I'm doing the recap. You'll hear us saying all the same things, using the same words, the same indicators, the same rules. Nothing has changed. I don't think we've changed a line of code or a rule to our methodology since 2008. If it's not broke, don't fix it. We're not perfect. We're not the Holy Grail. You're not going to be profitable on every trade you take. In fact, over the last 9,000, whatever number of trades I told you we were up to, over the last 176 weeks, we know going in 20% of the time the market is not going to do the next high probability thing. And we have no control over that. So we don't bang our head, we don't kick our dog, we just move on to the next trade. That's all. In the mornings when Michael gets stopped out, you don't hear him pitch a fit, or you don't hear him try to duck and weave and dodge his way out of, what actually just happened. No, a stop out's a stop out. A stop out is as much a part of trading as breathing is a part of life. So get that in your head, okay? All right. With that, I had a couple of headlines I was going to share. No reason I can't still do that real quick. It's just a couple. Something big is happening in Las Vegas. Ultra techies, or ultra rich techies, are scooping up real estate. Two of Silicon Valley's most prominent investors snapped up multi-million-dollar properties in Sin City this year, reflecting the influx of out-of-staters swooping in and setting Las Vegas's luxury market on fire. Facebook investor Mark Andreessen made the most expensive purchase ever recorded in Las Vegas. He paid $36 million for a little patch of vacant land. $36 million. Meanwhile, his co-founder, Ben Horowitz, bought a $14.5 million mansion with views of the Strip just minutes away. Las Vegas, with its reasonable cost of living, entertainment venues, and nearby state parks, is one of the many mid-sized cities seeing a rush of newcomers. Miami and Austin have also exploded in popularity during the pandemic as growing tech hubs. Reddit. I don't know how many of you are familiar with Reddit, but it's a pretty big deal. It's REDDIT. It's as in I read it on the internet. Sometimes Reddit is referred to as the front page of the internet. There are groups and subgroups and threads and subthreads on every subject you can imagine. Well, they have confidentially filed to go public. After becoming the go-to site for day traders during the meme stock frenzy earlier this year, the company announced it had confidentially filed for an IPO. The New York Police Department is considering spending $12.3 million with Tesla as part of the city's push towards an all-electric police fleet. It could buy as many as 250 Model 3 electric cars, according to Bloomberg. And Chipotle, if you like it, I don't. Just saying. They just announced a digital-only restaurant. The restaurant, which will open in Ohio later this month, is called the Chipotle Digital Kitchen, and all orders will be made digitally and picked up by walk-up or a drive-through lane. You won't have to encounter any humans in the process. Uber Eats is trying out driverless food deliveries in 2022. Uber Eats has partnered with driverless technology company Motional to launch a fleet of electric autonomous vehicles to deliver meals around the Santa Monica area of Los Angeles as their beta test. So what will happen is you'll order, as you do with DoorDash or with Uber Eats, I guess, and the car will pull up in front of your house, and I don't think a little robot's going to get out and bring it to your door, but it will text you your food is here, and then you'll just walk out to this driverless car, open the door, get your food that you ordered, close the door please, and then the auto will, once it senses you're far enough away from the car not to hurt you, it will take off and return back to its hub to pick up its next delivery. Volkswagen. When I was a kid growing up, I had a copy of Playboy hidden under my mattress that had a full-page ad for the Volkswagen Beetle. Now, I don't know if that name was a play on how it looks or because the Beatles were so famous or both, but I remember brand new showroom floor price, it was in that full-page ad, $1,600. I remember that. $1,600 for the first, I think it was the first year that the Volkswagen Beetle was available here in America. Well, Volkswagen now has ID.4, an electric car people will actually want to buy. For buyers who are interested in going electric but don't need the high-tech features of a Tesla, the ID.4 offers a good range and plenty of space, starting at not $1,600, but $40,000. And I haven't shopped for a new car in a long time, so I think $40,000, $50,000 is kind of the going price nowadays for a car. That was tech news. Is there anything else? Coronavirus cases surge as Omicron concerns spread. I'm not even going to read this because it's so far left on my fall down. But our thoughts and prayers are with anyone and everyone who has been affected by the coronavirus, whether it was you or a family member or friend. We never want to make light of this. You know, even one death would be tragic. Speaking of deaths, I think I mentioned this the other day. Over 100,000 people have died this year of opioid overdose in America. That's more than automobile accidents and gun violence combined. And also a judge, I might have that right here. Excuse me. U.S. District Judge Colin McMahon in New York on Thursday rejected OxyContin maker Purdue Pharma's bankruptcy settlement because of a provision protecting members of the Sackler family. Now, for those of you that aren't familiar with Purdue, it used to be this tiny company that made laxatives until they hired a brainy salesman who, it's a long story, and there's podcasts out there that just Just go on Apple Podcasts or wherever you get your podcast and Google Purdue or Sackler family. It's Sackler. They got shielded in this. I mean, they're having to pay out billions of dollars to people who became addicted to a drug that in their advertising they claimed was non-addictive. So anyway, the judge threw out the settlement protecting members of the Sackler family who owned the drug maker from separate lawsuits over the role of the company's drug OxyContin in the opioid crisis. Connecticut Attorney General William Tong, one of the state attorneys general opposing the deal, called the ruling a seismic victory for justice and accountability that will force the Sackler family to confront the pain and devastation they have caused. Steve Miller, chair of Purdue's board of directors, said the ruling would delay and perhaps end the ability of communities and individuals affected by opioid abuse to receive billions to fight the opioid crisis. So this angle is so sinister. It's like, okay, you don't like the deal we gave you, the billions we offered you, you want more, screw you, you're going to get nothing. That's the threat that's being made by their attorney, who I'm sure is very well paid. Biden acknowledges that social spending won't pass this year. He released a statement late yesterday acknowledging the Democrats won't be able to pass his nearly $2 trillion bill seeking to expand the social safety net until next year. Democrats had hoped to approve the legislation before the end of 2021, but negotiations are moving slowly with moderate Democratic Senator Joe Manchin, Go Joe, of West Virginia, who has balked at the cost. Democrats in the evenly divided Senate need every vote in their caucus to pass the bill. A 2-week cooling off would not be the worst thing, said one Democratic senator. In other words, he wants to go home for Christmas, which he's going to do anyway. But House Progressive Caucus leader, Representative Pramila Jayapal, said senators should stay through the holiday break until they pass the Build Back Better plan. These guys can't agree on anything. And the other one, all she can do is laugh. One can't remember where he is, and the other one, she just laughs about it. So, God help us. And I mean that. Please, dear God, send help. Your other son, Dwayne. The Food and Drug Administration on Thursday permanently lifted a restriction against accessing abortion pills by mail. The regulator previously required women to obtain the pills for medication abortion, an increasingly common method authorized for ending pregnancies up to 10 weeks gestation, in person from certified healthcare providers. The change came as the Supreme Court considers new abortion restrictions in Mississippi, with members of the High Court's newly expanded conservative majority indicating that they might roll back or even overturn Roe v. Wade from 1973, the decision that made abortion legal nationwide. In April, the FDA temporarily suspended the requirement to obtain the drug mifepristone in person due to the coronavirus pandemic. So the reason you're supposed to see a healthcare provider is because you're not supposed to use that abortion pill if you're beyond 10 weeks of gestation. But ordering it over the internet, you can say anything, right? So now it's okay to go back to just ordering them on the internet. Perhaps that will change if the Supreme Court does roll back or overturn Roe v. Wade. We'll see. And Chris Noth. Now, I never watched the show Sex and the City, but he was on Law and Order for many years. He's on a new show now. I can't think of the name of it. But 2 women have accused him of sexual assault a week after he returned to his role in the Sex and the City reboot. And just like that, according to the Hollywood Reporter, one woman identified as Zoe said Noth assaulted her in Los Angeles in 2004. She said she had blood on my shirt and had to go to a hospital for stitches. She said seeing that he was reprising his role in Sex and the City set off something in me. Another woman identified as Lily alleged Noth assaulted her in New York in 2015, leaving her feeling totally violated. Noth, who played Mr. Big on Sex and the City, denied the allegations. And yes, that's why he was called Mr. Big. It's not difficult to question the timing of these stories coming out. I don't know. This is Noth speaking. He says, I don't know for certain why they are surfacing now, but I do know this. I did not assault these women. It's kind of like I did not have sex with that woman. You know who I'm talking about there. So I always liked the guy. I thought he was a great actor. I hope it is untrue. I really do. Okay, guys, this is going to wrap it for the week. I do hope you have a great weekend. Whoever you are, wherever you are. And a reminder, join us for church on Sunday mornings at 9:30 a.m. Eastern. If your smart TV will allow you to launch YouTube, just search Elevation Church Live, and at 9:30 a.m. Eastern, the live stream will appear. You'll get to enjoy the entire praise and worship and the sermon. And Pastor Stephen Furtick, since the pandemic, that's mostly where my wife and I have gone to church. That's become our storehouse. Although we now, since they opened a CCV near us, just a couple miles from our house, we go there on Saturday afternoons at 4 o'clock. They have a nice 1-hour service. It's a satellite campus, so it's like you're sitting in front of it. They have an on-site campus pastor who comes out and speaks a little bit, and they have a live praise and worship team. But then the big screen lights up, and the head pastor of CCV preaches. So you can watch that on the internet as well. But the one I really want you to, because there's quite a few of us that go to the 9:30 a.m. Eastern service. Just Google elevationchurch.org or YouTube, or search it on YouTube and add it to your favorites, and it'll notify you Sunday morning when the service goes live. They even have an app you can download for your phone. I am rebuilding the CFRN radio station, and pretty soon there will be an app that you can download so that you'll always have a pocket full of good Christian music and sermons in your pocket. Okay? All righty. It's been a great week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.